Hey everybody, how you doing? It's Bruce here, Uncle Bruce here from the channel called Stock Markets with Bruce. Welcome to my channel today, and welcome to today's video. I'm going to show you how to make what I think some really easy money on GameStop shares, even with the price craziness that we've seen in the last couple of days, week. Has it been crazy, nutty, kooky? Yeah, it sure has. We've had hundreds of millions of shares trade. We've had all kinds of gyrations in the stock from the lows of $10 2.5 weeks ago up to $80 in the pre-market on Tuesday or something, and Wednesday 40 to 60, Thursday 30 to 45, 50. I mean, just on and on and on with the insanity. Thank you all very much. I hope you've enjoyed it. Look, I have a way for you to, even now with the stock backing off into this $22 neighborhood, the company raising this money to make some cash. Let me show you something. First of all, right here on this chart. Don't mind my low tech way of showing you how I do my videos here. Here is the GameStop share. These are the shares of GameStop on Friday evening after the after hours trading. So that's just after 8 o'clock in the evening Friday night. So if you go way over here to the very end of that chart, the very end, you'll see it close to 21.30. That's what it says up there. And you notice how the stock wavered all day long between the 20 and 22.50 neighborhood. The range for the stock just over here, 1970 for the low on Friday, and the high was 22.41. And the volume after hours, just again, up where that 2130 number is, it was 2.5 million shares. During the day on Friday, notice just up ahead here, we closed at 2221 on the actual night, the evening, down 546, sit 19% lower, and the volume yesterday or Friday was 96 million shares. Average volume is now about 17 million because of the increase in trading. That's where we were. Okay, so now let's talk about where can you make some money now. Okay, now I'm gonna throw this at you folks out there who are right now, you're a shareholder of GameStop and you're looking at me going, Bruce, help me, please, God help me. I got stock in GameStop and I don't know what to do. I had it at $10 a share, 2-3 weeks ago, and the thing ran up on me and I didn't know what to do, and I just folded my arms because I thought this might go again, and now it's backed off to here. Is it all over? Am I an idiot? What do I do? And I'm saying to you folks who are shareholders of GameStop, if you've got 100 shares, 1,000 shares, 10,000 shares, doesn't matter. I have a strategy for you that you can employ Monday morning anytime you want. You can do this anytime you want, but here's an idea for you coming up. Now, quick recap. As you know, the company on Friday announced they're going to raise a bunch of money by selling stock, 45 million shares out of their treasury, into the market. They might have done that by now. It might already be over, or it'll be finished on Monday morning. I'm going to guess the company will raise $950 million, added to their about $1 billion plus they've got right now. They're going to have almost $2 billion in cash in their treasury on the close of Monday, Tuesday, imminent. Okay. My hunch is, personally, I think the shares can go back up again. Why? Because with $2 billion in cash, and losing less money than they're losing from last year's results. And this year will have a larger profit than last year's profit. There could be all kinds of activity in the company going forward with $2 billion in cash. They could be turning this into an investment holding company of some kind. I have no idea. I don't think the stock's going back to 10. Anyway, you're a fan. You don't want to sell the stock. You want to benefit from the stock. You want to give Ryan Cohen and his team a little more leeway because they've got $2 billion in cash, and no debt. Okay, what do you do? I say sell the stock, and you're looking at me going, what are you talking about? Sell the stock? You just told me how much it's great. I said, here's the strategy. I have a strategy for you to be paid in cash heavily to do what I'm about to tell you to do. All right. You sell the shares. Let's just pretend you do this. Okay, go with me on this. Let's say you have 1,000 shares, just 1,000. If you sell the stock at $22, where it closed at on Friday night, you bring in $22,000 in cash. You can turn right around and you can write a cash secured put against the stock. And I believe it's right here. Yes, take a look at this. Again, let me put my mug over here and bear with me as I try to tell you what's going on. Go over right here. See that 22.21 number? That's the close Friday night. All right. Above that, $22 even. That is a contract, a $22 put contract that expires May the 24th. That's in six days from now. This is Sunday. Today is Sunday, May 19th. Next Friday, this contract dies. All right. This is a $22 cash secured put. The last time it traded, it was at $3.40 a contract, or $3.40 per share, which is $340 a contract. It was up $1.29 on the session because the stock went down on Friday. The bid was $3.20 and the ask was $3.55 at the end of the day. 1,864 contracts traded on Friday all day long, and only 841 exist. So you can see the turnover of this contract was massive. If you sell the shares on Monday morning, let's say at 22,000 shares, you can write or sell 10 of these contracts, 10 of these 22s, and I'm going to guess you'll bring in around $3 to $3.20 a share. They may not be as high as $3.40 on Friday because we're losing time, but they're going to be $3 to $3.20, which means you're going to bring in $3,000 to $3,200 in cash. And what are you doing? You're offering to buy 1,000 shares at $22. Now, you just sold your 1,000 shares at $22. You're willing to buy them back for $22 if you are handed in cash $3,000 to $3,200 on Monday morning. Why would you do something like that? What, are you crazy? No, you're not. You're not crazy. You're quite smart. The reason that you're offering your stock, selling it and offering to buy it back is if you want to make a $3,200 gain on this move. If you were to be made to buy the stock back, let's say the shares go to $20 a share, they've lost $2 in value from 22 to 20, and now you have to buy the 1,000 shares at $22, you have the money for 1,000 shares at $22 right over here. You just sold the shares this morning. You can buy them back Tuesday or Wednesday for $22, but you also have 3,200 additional dollars in your account. And so in effect, by Wednesday, Thursday, you're sitting on 1,000 shares like you were Sunday watching this video. And you got 1,000 shares on Wednesday, Thursday at $22, and they got 3,200 cash in your bank account. Now, if the stock is down $2, you're down $2 a share. But if you don't do anything, you just watch me and say, that's interesting, but I'm not going to do it, you're going to end up with holding the 1,000 shares you've got anyway. They're going to be $2 less in value anyway, but you don't have 3,200 cash in your account that I found for you by writing these 10 contracts. If the shares on Friday night, Friday evening, the close on Friday, are trading at 22.01 or more, $22.50, $23, $25, these contracts are worthless. As long as the shares are over $22, these contracts will have no value. You keep all $3,200 and you have 22,000 cash in your bank, and you can now sit there and go, I got $25,200. That's equal to $25.20 a share, by the way. And if the shares close at 25 on Friday next week, you're going, well, okay, the stock's 25 and I got 25,000 in my bank account. Guess what you're going to do next? You're going to write another 10 cash secured puts at whatever the market is at, 25. So you're not going to write 22s, you're going to write 25. So you're going to bring in another $3,000 plus for the week and fold your arms and go, okay, I'll buy the stock if I have to, or I'll let the contracts die worthless. Or what could happen between this Monday and Friday, the shares sit at 21, 22, 23. These contracts are going to lose value every day this week because they die on Friday. And at $22 a share, these contracts are worthless. At $21 a share, they're worth $1 each. At $23 a share, they're worthless. At $20 a share, they're worth $2 each. If you buy them back for $2, you keep the $1.20 differential. If they go to 25, they're worthless. You're in a controlled position. Now, this is just a contract that dies next Friday. Okay, I'm not talking about something a year from now. I'm talking about next Friday. How about this contract right here? Again, 22.21 final trade, $22 put contract, but this is not next Friday's contract. This is the Friday after that. So if you want to write a cash secured put that expires on May the 31st, a week from Friday, instead of getting about $3 a contract, you'll get closer to 424. This is where they closed that Friday night, 424, and they were 395 to 440 bid ask on the session. You could theoretically get 420 for these on Monday morning. Another $100 a contract more, or for 1,000 shares, $1,000 more. You have $4,200 in your hand for writing a $22 cash secured put. Look, if you don't have any stock, but you do have 22 grand lying around, you can write 10 of these contracts, these $22 contracts. You're prepared to buy the stock for $22,000, but someone's going to give you 4,200 up front for the privilege, which means if you take 4,200 away from $22, you're paying $17.80 for the stock. Are you comfortable paying $17.80 for the stock? If you were to be exercised, the shares go down to $15. I can guarantee you this: you will get the shares at $17.80. You'll be made to buy them at 22, less this 420. You'll be into the stock at $17.80. Guess what you could do now? You're long the stock and it's trading at $15 a share. You're just going to turn around and write call options on these shares. You'll write $17 call options, good for 2 weeks or 4 weeks or 6 weeks. You'll bring in $3, $4 for those, which will take your $17.80 cost factor down by $4 a piece to $13.80. You will always be writing. But if you've got the stock now, you sell the stock for 22, you write 10 put contracts, bring in $4,200. And between Monday coming up and the week Friday, if the shares are sitting in this neighborhood, 20 to 22 to 24, and the closer we get to Friday the 31st, they get more to the 24 level, these contracts will expire for zero. You may not even have to buy them back and keep all $4,200. You may decide, I'm going to buy these back at $1. I'm going to take 320 on this trade. As soon as these contracts reach $1, I'm ending this trade. It could go to $1 by Wednesday, Thursday this week, or it could go to $1 by Wednesday, Thursday the week after, depending on where the stock is at and how much time is left. One more trade for you. What if you say to me, Bruce, I love you, you're a great guy and all, but you know what I really want to do? I'd really rather write a cash secured put for even more money. I'm not comfortable with $3 or $4 a share. Can you get me more than that? Here's something to think about. Here's a $22 cash secured put, a put contract you could write that expires January the 17th in 2025, 7 months from now. You could write this contract. Last trade was $875 a contract, $875 a contract, which is $8,750 in your pocket. If you got 1,000 shares, the bid ask $755 to $9.30, pretty wide. But reality is, if the shares are $22 on Monday morning and you sell them and then you write 10 of these, you could bring in this pretty close to $9 a share in cash, where you are offering to buy back your stock for the $22 you just got for them, but you got to give me $9 a share to compensate me for the 7 months in time that I am theoretically giving you to sell me these shares at $22 a share. That 9 grand is in your pocket. You can do whatever you want with it. You can buy more stock with it, or you can write more cash secured puts with it. You could do credit spreads with it. You could go into NVIDIA credit spreads. You can take all of my lessons on how to write options, and you'll still have a ton of money left over. Head over to my website, stockmarketswithbruce.ca, for that. Here's one more trade for you. I think I might be accurate. Yeah, here's another January 2025 expiry contract. This one is expiring at a strike price of 25. You're willing to buy the stock back for $25 a share between now and January 2025. You'll be paid $11 a share for that privilege. Why would you get more for this contract than the $22 contract where you're willing to buy the stock at $22? is $3 cheaper than this one. You're willing to pay $25 a share. So you're going to get more money for this. Well, you get $11 a share right now for the $2,200 stock you just sold. You just sold your stock for $22 a share. You brought in 22 grand. You're now writing $25 contracts instead of $22 contracts. You're going to have 25 grand lying around to do this. So you add 3,000 of your own money and you haul in $11,000 back. And so you're plus 8,000 actually. And you're sitting there with your arms folded going, okay, well, if the shares want to go between now and January 2025 to 26 or 28 or $30, these contracts are going to plummet in value. They're not going to come down to these kinds of prices like you just saw here on these 22s. They're going to come down to the $4 neighborhood, $5 neighborhood. They're going to drop dramatically if the shares go up. If the shares stay in the 2025 neighborhood, you're going to get exercised. You're going to be made to buy the stock at $25 a share. You have the 25 grand sitting here. It's waiting for 1,000 shares on top of this 11,000. But if you are exercised and you are forced to buy the stock at 25, since you've been given $11 up front, you're actually paying $14 a share to buy your stock back. That's what you're actually doing. You're sitting here going, give me the stock, make me buy it at $25. I got $11 in compensation up front already. I'll buy the stock for $25, knowing I've already got 11 of it. I only need $14 a share to buy them all back. That is called making money. That is a 44% return on your money. If these contracts became zeros and they died worthless in January and you didn't do anything, stock closed at 25.01 or higher in January, you didn't buy these back, you didn't do anything with them, they will be worthless. You keep all $11,000 against your $25,000 deposit, and that is 44% on your money between now and January. You want to annualize that? You can almost double that. This is close to a 75-80% return per year. Of course, the moment you either buy these puts back, hopefully for a nice low price, let them die worthless, you can turn around and write another batch of cash secured puts and bring the money in again, offering to buy stock for a certain period of time. This is the beauty of cash secured put writing in the markets. And in the case of GameStop, this is an opportunity right now where there's some serious premiums being paid by option gamblers where you can take their money off the table and sit on it. By the way, a number of you have brokerage accounts where if you do this trade, you'll have a bunch of cash in your account, $25,000 plus $11,000. You'll have $36,000 cash in your account. You'll get paid interest on that money. Now, if you're getting 4% a year, that means you're getting 1% every 3 months on that money. $360 every 3 months to just sit there for the 7 months this thing goes for. There's $2,200. Thank you very much. Nothing wrong with that little game. If you want to learn how this is done, how to write stock options and make some money, go to my website right here, stockmarkerswithbruce.ca. If you get yourself over there, you're going to come to my homepage. Right up here, you'll find me right here. The .ca means Canada, of course. There's my homepage right there. Click on classes and you'll come right over to this section here, attention students, classes in session. And then you'll be able to pick up whatever classes you want to start learning how to do this. I suggest class number 1. Every one of my viewers that have been doing this, my thousands and thousands of viewers who are doing these option trades, option writing, they tell you start at class number 1. Consider this an at-home college course where you're watching me in plain English explain to you how to buy, call, and put options, how to write, call, and put stock options. Go to 3 and 4 using aggressive trading strategies to profit from stock options. Go here to 5 and 6, winning strategies new investors need to know, common mistakes they make. 7 and 8, earning income from writing put contracts. That's what we're talking about. Lesson 7. Number 8, how to trade stock option credit spreads. Number 9, how to trade call and put butterfly options. Number 10, how does Uncle Bruce pick his stocks. 11 and 12, using poor man covered call writing strategies to quit your day job. Number 12, stock option rollover strategies for calls and puts. Number 13, stink offers, stink bids, and the psychology of the markets. Number 14, how to maximize profits from writing stock options. Here's number 15, advanced poor man cover call strategies. Number 16, how to use other people's money to profit in the options market. We talk a lot about credit spreads there. Number 17, fixing option trades and adding cash with smart spreads. 17 lessons for you. You don't have to take them all in one day. You can't take them all in one day. It's impossible. You know why? Each class is 1.5 to 2 hours long. 17 of them, you don't have 30 hours in a day. So watch a class every couple of days, maybe 2 or 3 a week if you want. Maybe weekends are the time you can devote some time to this. So Saturday, watch 1 or 2 classes. Sunday, watch 1 or 2 classes. You'll catch up to us very quickly. Join me Monday to Friday live on this channel at 8:30 Eastern Time, from 10 to 10:30 Eastern Time. When the markets are open, I'm on the air and I'm talking about how you can write call options and put options and spreads to make money on everything, including GameStop. A lot of my viewers are GameStop shareholders. They've been in this market since the GameStop craziness in 2021. You're welcome to join us, and I think you'll get a real kick out of it. For some of you, it could completely change your life, where you're holding stock and that's all you ever do. You buy stock and hold it. You buy stock and hold it. Now you can buy stock and write options against your stock. You can sell stock and write options against the very stock to buy it back and be paid to be a fan and holder of these securities. It is a life-changing way to play the stock market. For those of you who are in your 30s and 40s, this might be what you're looking for to bring in income on the side from your paycheck over here, bring in income over here to eventually replace your paycheck and quit your day job, living full-time off of option premiums. It is being done. Mark my words. If you're in your 40s or 50s and 60s, this cash flow method, this way of bringing cash in from the gamblers that are gambling gazillions of dollars on the option floor, you're the casino taking their money. This could allow you to grow your 401k, your IRAs, your personal investment accounts to the point where you have a comfortable retirement coming up in just a few short years. Some of you getting laid off or being told to walk away from your jobs. Here's a severance check. Here's your 5,000 shares of the company you bought over the years. This could be the game changer, where the stock you've been holding in the company you've been working for that you couldn't do anything with, now it is vested. It is all yours. You can do whatever you want with these shares. You can learn how to write call options against these shares for income that could generally keep you out of the workforce for the rest of your life. You don't ever have to go back to work ever again. Live off your own investments. Check out the classes and check out my show every Monday to Friday. And if you like what you see, give this video a thumbs up, and we'll see you bright and early at 8:30 Eastern Time, Monday morning, every Monday morning until Friday when markets are open. And let's get you richer. Thank you for joining me today. Have a great rest of your day, everybody. We'll talk to you later. Bye for now.